Hello everyone and welcome back to the sessions on economics for finance. In this class, I'm not going to discuss anything new, but what we have learnt in the previous class, we are just going to revisit those concepts basically for a good revision and practice. That's all. So when you are listening to me right now, believe me, whatever I am putting forward as a question, you should think over it, and before I write the answer, you should have an answer assessed in your mind, in your notebooks, and when I am taking you with a flow, make sure that you are catching that flow. That is important. So if you can recollect, there are three methods of determining national income that I have discussed in the previous class: value added method, income method, and expenditure method. Three methods. In the previous class, what we did was only one of the methods, and that was value added method. The income method and expenditure method you have yet to learn. So this value added method, it is basically coming up with the first parameter of calculation of national income or determining national income as gross domestic product at market price, because the summation of value added is the gross domestic product at market price. That is why we are calling that method as value added method. So I'm obviously not going to talk about other methods. Let us first focus on that one method that we have already learnt, that is value added method. Now in that value added method, we have learnt 8 components. I am going to mention each of these components, and then we are going to connect each component with the other. So let me just expand the screen size for you, and you please try to focus on what I am saying. So as I just mentioned that there will be 8 different components. Let us write up each of these components. One is GDP MP. You know GDP MP, how this is read. It is gross domestic product at market price. Then we have next component as GNP MP, that is gross national product at market price. Then we have NDP MP, that is net domestic product at market price. And then we have NNP MP, that is net national product at market price. So 4 components which we have written over here with the base of market price. We have 4 more components in the same order, but where the base changes to factor cost. So it will be GDP at factor cost, GDP FC, that is gross domestic product at factor cost. Then we have GNP FC, that is gross national product at factor cost. Then we have NDP FC, that is net domestic product at factor cost. Then we have NNP FC, that is net national product at factor cost. And we know one thing for sure, that net national product at factor cost, this is what we call as national income. Correct? So what we are trying to do now, we are trying to connect each one of these parameters with one another. So we have 8 parameters. We are going to connect each one of these with one another, so that the objective is, if I arrive at one particular parameter, for example GDP at market price, and from that I have to find GDP at factor cost, I should be able to do that. If I want to arrive at GNP at market price, I should be able to do that. If I want to arrive at NDP at market price, I should be able to do that. I want to arrive at NDP at factor cost, I should be able to do that. Or alternatively, there may be a reverse approach, right? Reverse calculation. For example, I first inform you NDP at market price and ask you to find GDP at market price. Possible, right? You understand my point? It is possible that I give you NDP at market price and ask you to find GDP at market price. If you understand the connection between GDP at market price and NDP at market price, automatically you will be able to connect the two parameters and identify one through the other. Now let me remind you once again, which is the method that we have learned by far? Which is the method that we have learned by far? The method that we have learned is value added method. So I am now going to talk about, I am going to give you time to write everything. So as of now, just keep listening to me. I promise you I am going to give you time to write each and everything in detail. So let me first talk about value added method. Under value added method, how do we assess GDP MP? So GDP MP is basically gross domestic product at market price. So in order to have a better viewing, let me expand the screen size for you. So GDP MP is determined as summation of value added. Correct? Summation of value added. We have learned this. Now, how do you understand the meaning of summation of value added? Now, here you have to understand this, right? And the base that we have to adopt is the market price. The base is the market price. The summation of value added has to be at the market price. Now, what is the meaning of value added? We have learnt in the previous class. So, let me just explain that to you once again. It is basically market value of, or I would use one more word, that is gross market value. You know, the term gross is basically before charging depreciation. Gross is used for the values before charging depreciation. So, gross market value, goods and services produced in the most important thing, domestic territory. In the domestic territory of the country, and from that you have to subtract, what is that you have to subtract? Tell me, what is that you have to subtract? You have to subtract, I would again say market value of intermediate goods and services consumed. So, recollect, we have learnt this already. Okay. So, what I will do is, we are going to now connect this information as the base to establish connection between these 8 factors. by taking various examples one after the other. But first what you need to do is you need to focus on value added method and first understand how do we arrive at GDP at market price. So here I'll give you a couple of minutes to note down this particular content what I have written, even though you have written this earlier, but it's no harm in writing it once again just for your revision and practice. So please take a couple of minutes and quickly write up what you find over here on screen. Alright friends, once you have completed writing the determination of gross domestic product at market price, which will be summation of value added, and based on what we have just mentioned over here, as in what will be the summation of value added, it is gross market value of goods and services produced in the domestic territory of the country minus the market value of intermediate goods and services consumed. So that is basically the gross domestic product at market price. So now coming to this, we have just learnt one component out of this, how to determine GDP at market price. So one component learnt. Now I want to arrive at the next component, that is gross national product at market price. Gross national product at market price. So obviously the source of determining that is the gross domestic product at market price. Domestic means produced within the domestic territory. So imagine if we are talking about India as a nation, whatever goods and services are produced within the domestic territory of India, whether it is produced by Indian companies and citizens or produced by foreign companies and citizens, if it is produced in India, it is part of GDP. But now I want to arrive at GNP. So what adjustment we have to do? Try to recollect. We have learned that already. The adjustment that we have to do is the gross domestic product at market price should now be aggregated with net FIFA or net FIA, the way you want to mention it. It is basically net factor income from abroad. So can we recollect what is the meaning of net factor income from abroad? So Indian companies and citizens who are working outside India and earning income from there, we will add their income as part of GNP, and foreign companies and citizens who are producing goods and services in India, their income we will deduct from GDP to arrive at GNP. So we move to the next point over here and establishing interrelationship between the GDP at market price and GNP at market price. And what we say, first thing we talk about income of income of Indian companies, or first I would write citizens, Indian citizens and companies earned abroad minus income of foreign citizens and companies earned in India. Because I am talking about India as a nation, when we compute this whole thing, we will call this as net factor income from abroad, or in short I call this as net FIA. So if I want to arrive at if I want to arrive at GNP MP, that is GNP, gross national product at market price, what I should do? I should take the starting point as GDP at market price, GDP MP, gross domestic product at market price, and to this I should add net FIA, that is basically the net factor income from abroad, and we will be able to establish connection between GDP at market price and GNP at market price. So you have learnt even this, but let us take some effort and time to note down this as well once again, just for your revision and practice. Do it right away. I am giving you a couple of minutes. Alright friends, if you have done this, let us go back to this part where we have written these 8 parameters, and now I'm going to put a tick mark over here because we have just established connection between GDP at market price and GNP at market price. Now, actually speaking, things are going to get much easier because if I ask you to convert GDP at market price into NDP at market price, that is gross domestic product at market price, if I ask you to convert to net domestic product at market price, do you know what is one thing that you have to adjust? Very simple, depreciation. Depreciation is what you have to subtract from gross domestic product at market price to land up at net domestic product at market price. So I'm going to write that one equation over here. Okay, so that one equation will be simply GDP at market price minus depreciation will give you NDP at market price. This one equation is going to connect between which two factors? GDP at market price and NDP at market price. So throughout the chapter national income, when I say gross, it is before charging depreciation. When I say net, it is after charging depreciation. So what I want you people to do is, in exams the question can be of this type, that they may give you net domestic product at market price and they may ask you to find gross domestic product at market price. Possible, right? So you should understand that net domestic product is after charging depreciation and gross domestic product is before charging depreciation. So what you will actually do is, to the net domestic product at market price, you add depreciation to get gross domestic product at market price. So if I write one more equation this way, that net domestic product at market price, okay, plus depreciation would give you GDP, gross domestic product at market price. Another equation what you can build over here. Logically, if you are clear, things are so simply connected. Now if I have to define, how would I derive NDP at market price? How do I derive NDP at market price? Tell me. Simply GDP at market price minus depreciation. Some people might be wondering, sir, that you are writing the same thing what you wrote over here. It is nothing different. Of course it is nothing different. It is the same thing. Point is, your vision should be set on these two parameters, that GDP at market price, NDP at market price, the only differentiating factor between these two parameters is the depreciation. If you have written this along with me already, I'm sure you would have written this along with me already. In that case, we can go back and put a tick mark over here that we are clear with NDP at market price. Now if I want to arrive at NNP at market price, net national product at market price, how will I do? Let us establish that relationship. So here we want to find NNP, net national product at market price. So I believe you are now efficient enough to write it along with me, so that we don't end up taking too much time. You can write along with me, but please understand and write, don't copy everything from the screen. NNP at market price, this I want to find. Now how can I do that? First thing is, I take GNP at market price, and from this I subtract depreciation. I take GNP at market price and subtract depreciation to arrive at NNP at market price. Another way is, if I want to arrive at NNP at market price, I can take the starting point as what? NDP at market price, correct? I can start with NDP at market price, net domestic product at market price, plus net FIA. This will also give me net national product at market price. I can write one more version of the equation, that if I want to arrive at NNP at market price, we can start with GDP at market price plus net factor income from abroad, that is net FIA, and from this we subtract depreciation. Even this can give you the amount of net national product at market price. I am sure you have written this along with me. Alright friends, once you have written this much, let us go back and see that we have understood this connection also, net national product at market price. So now 4 parameters we have understood: gross domestic product at market price, gross national product at market price, net domestic product at market price, and net national product at market price. Now if we just shift the base from market price to factor cost, the next 4 parameters get ready instantly. So let us talk about that now, and for your reference let me expand the screen size once again. So here we are going to talk about something known as net indirect taxes, and that is basically indirect taxes minus subsidies. Net indirect taxes is indirect taxes minus subsidies. So if I want to find out GDP at factor cost, that is gross domestic product at factor cost, what I will do, the first parameter, that was GDP at market price, from that I subtract net indirect taxes, and we are landing up at GDP at factor cost. Once we arrive at GDP at factor cost and I ask you to find NDP at factor cost, what will you do? GDP at factor cost minus the depreciation. If I tell you that okay, you got GDP at factor cost, now arrive at GNP at factor cost. So what you will do? To arrive at GNP at factor cost, what you will do? You will take GDP at factor cost plus net factor income from abroad. Then I tell you that how would you find NNP at factor cost? So you already got GNP at factor cost, subtract depreciation, you arrive at NNP at factor cost, or you would have got NDP at factor cost. To that you add net factor income from abroad and you will be getting NNP at factor cost. So let me write up all those parameters which will connect all those 4 factors. So let me again expand the screen size for you, and let me write here, if it is NDPFC, that is net domestic product at factor cost, it will be GDP at factor cost minus depreciation, and then if we talk about GNP at factor cost, it will be GDP at factor cost, and to this you add net factor income from abroad, and you get GNP at factor cost. How to arrive at NNP at factor cost? I am going to give you a few equations for that as well, but first you quickly write up what you find on screen. Alright friends, I am sure you have finished writing this. So now we are left over with just one factor, that is how would we determine NNP at factor cost, that is net national product at factor cost, and that is what we call as national income. So here we have two different ways of arriving at that, two different ways. So we are talking about net national product NNP at factor cost. So what you may do is, you may take first of all NDP, that is net domestic product at factor cost, NDPFC, and to this you add net factor income from abroad, net FIA, and you get NNP at factor cost. This is one way to arrive at that. Another way to arrive at that is NNPFC, that is net national product at factor cost. You start with GNPFC, gross national product at factor cost. In converting the gross into net, there is one adjustment that is required. From this you simply subtract depreciation. Now guys, what I want from you is, your comfort should be to land up to any parameter from any parameter. For example, another way to arrive at net national product at factor cost could be, you start with NNP MP, that is net national product at market price, and from this you subtract net indirect taxes. That's it, and you get net national product at factor cost. And net national product at factor cost, what we have computed via any of these equations, what you find over here, this is basically the determination of national income. So I'll give you a minute to note down this, quickly write it up, and then I take you ahead. Alright friends, once you would have written this whole thing, let me now take you back to the initial part, and just like a checklist, we have learned how to arrive at GDP at factor cost, GNP at factor cost, NDP at factor cost, NNP at factor cost. What I want you all to be very good at, any of these 8 factors given to you and any of these 8 factors asked to you, you should know how to connect one with the other. So if I talk about permutation and combinations, so here permutation is not required, combination is what is required. If I tell you that we will have to select any 2 parameters out of the given 8 parameters, correct? How many possibilities you can have, how many equations you can draw, how many you set combinations. So you know, out of 8 parameters, if I am selecting 2 for a combination, there can be how many combinations possible. You would have learned this in foundation at permutation and combination. So it is 8C2, and how do you determine 8C2? It is 8 multiplied by 7, that is 8 into 7, 56 divided by 2 factorial, or simply divided by 2, and what you will get is 56 by 2, that is 28 possible combinations. So all these 28 possible combinations, if you can put it in your brains, that will be the logical clarity. Some crazy people, what they would do is they would write up those 28 different equations and they would by heart that how to reach from this to this. That is madness. I don't recommend you people to do that. So for us to test whether our logic works or not, we can have plenty of examples, and if I give you one thing and if I ask you another thing, how to link up one to the other, you should be able to do that. So let us put it as a matter of test over here. Okay, let us put it as a matter of test. Suppose you have been given GDP at market price, and from here you have to land up to NNP at factor cost. How would you do that? How would you do that? is the question. From GDP at market price, I am asking you to land up to NNP at factor cost. Can you think and tell me how would you do that? So go systematically, I'll guide you how to think. So first what I'll do is, I want NNP at factor cost. This is what I want, right? This is what I want. To arrive at this, what is the base available? This base is available to us in the form of GDP at market price. First thing what I'll do is, I will convert domestic product to national product. See, approach, you understand the approach. Domestic to national, I will just add net FIA. I could convert domestic to national by adding net factor income from abroad. So domestic got converted to national. Now I have to convert gross to net. Correct? I have to convert gross to net. So for that, what I'll do is, I will subtract depreciation. Correct? And then if I subtract depreciation, gross got converted to net. One more change I have to do, that is, from the base of market price, I have to land up at factor cost. And for that, what I'll do is, I will subtract net indirect taxes. I will subtract net indirect taxes. Now guys, tell me, with what we have learnt earlier, I am telling you, some people do crazy work of kind of by hearting all possible equations. That is not going to work for you. If you understand the strategy of what we are doing, from converting gross to net, subtract depreciation. Converting domestic to national, you add net factor income from abroad. Converting market price base to factor cost base, you subtract net indirect taxes. So you should be comfortable going backward. For example, if I give you national income amount, that is NNP at factor cost, and I ask you to find GDP at market price, that is a gross value added, what you will do? What you will do? Just the opposite of what we have done over here. There you will have to convert net to gross. So first you add depreciation, then you have to convert national to domestic, so subtract the net factor income from abroad, and you have to convert the factor cost base to market price base, so add net indirect taxes. So if I give you that form of equation, it will be basically to determine GDP from NNP at factor cost. So GDP at market price, and you have to derive it from NNP at factor cost. So net FIA you added over here, you push it this side, and it will be net FIA that should be subtracted from NNP at factor cost. If you push depreciation to this side, depreciation should be added. If you push net indirect tax from this side to the other side, net indirect tax will have to be added. This skill of connecting one with other is all to be taken care in this chapter, this particular unit. That is what I am asking you all to do. So just make sure that you have written this particular equation. Now this could be just one example, right? We can have plenty of examples, and as I said, there can be 28 such equations. We don't want to write up all 28 equations, but suppose I conduct a test for you and I ask you to connect anything from anything, you should be able to do that. Alright friends, once you have finished writing this, let us take a few examples to have better understanding. Okay, so what I will do is I will give you some information over here. First of all, let me write example 1. Okay, in this example 1 I give you GDP MP, and suppose this is given as 20,000. Then I inform you net FIA, and that is suppose 2000. I inform you depreciation. Depreciation is suppose 4000. I also inform you net indirect taxes, and that is suppose 3000. And then I tell you that determine the following. Determine. First thing that you have to determine is GNP MP. Second thing that you have to determine is NDP MP. Third thing you have to determine is NNP MP. Fourth that you have to determine is GDP at factor cost. Then fifth thing that you have to determine is GNP at factor cost. Then sixth thing that you have to determine is NDP at factor cost, and seventh thing that you have to determine is NNP at factor cost. So consider this as your first example. I want you to note this example and just try attempting this. I'll give you 5 minutes time to note this example and be ready with your answer. I will just quickly conclude this whole thing after 5 minutes so that you get time to identify these calculations. Come on, start now. Alright friends, I have given you enough time to try out these calculations. So let us look into how you would have approached this and what should be your answers. So the first thing that we want is to arrive at GNP at market price, correct? GNP at market price. So we know GDP at market price, and that is 20,000, and we want to arrive at GNP at market price. From GDP at market price to GNP at market price, what you need to do? You need to convert domestic into national, and for that it is net factor income from abroad. This you should add to GDP at market price to get GNP at market price, and therefore this answer should be 20,000 plus 2,000. So this answer should be 22,000. Now we want to arrive at NDP at market price, net domestic product at market price, and what we have is GDP at market price. If we have GDP at market price 20,000 and we want to arrive at NDP at market price, basically we are trying to convert gross to net, and the connecting point will be depreciation. So from GDP at market price, if you subtract this depreciation of 4,000, you will be getting NDP at market price. So 20,000 minus 4,000, the answer is going to be simply 16,000. Now we want to arrive at the next one, that is NNP at market price. To arrive at NNP at market price, we already have NDP at market price. We have net domestic product at market price. We want to arrive at net national product at market price. Connecting domestic to national, what you have to do is consider net FIA, and if net domestic product at market price is 16,000 and net factor income from abroad is 2,000, I am going to simply add 16,000 plus 2,000 to arrive at net national product at market price, and that answer will be 16,000 plus 2,000, that is 18,000. Now I want to arrive at GDP at factor cost, correct? Next one, GDP at factor cost. To arrive at GDP at factor cost, I already have the base of GDP at market price. Converting market price base to factor cost, I repeat again, to convert market price base to factor cost, what you need to do is just one thing, that is make adjustment of net indirect taxes. So from GDP at market price, you subtract net indirect taxes to arrive at GDP at factor cost. That will be 20,000 minus 3,000, and that would give you 17,000 over here. So now next one, it is GNP at factor cost, gross national product at factor cost. So you can do one thing, you can take gross national product at market price and subtract 3,000 simply. So let me do that for you. Subtracting 3,000, we get 19,000. Now if you want to arrive at NDP at factor cost, the next one, NDP at factor cost, we have NDP at market price 16,000. We are to find NDP at factor cost. So what you need to do, from this NDP at market price, if you subtract net indirect taxes of 3,000, you will arrive at NDP at factor cost. So it is 16,000 minus 3,000, and that would give you 13,000. And lastly, if we want to arrive at NNP at factor cost, we can have connection with NDP at factor cost and NNP at factor cost. So domestic to national, if you want to convert, you just add the net factor income from abroad. So it will be 13,000 plus 2,000, that will give you 15,000. That is one way to look into it. Another way to look into it could be, you pick net national product at market price, that is 18,000. From that you subtract net indirect taxes, that is 18,000 minus 3,000, that would give you 15,000. Alternatively, you take 13,000 plus 2,000, even that would give you 15,000. So finally the correct answer over here will be 15,000. So I'll just put it on display for you, and I'm sure you would have got exactly the same answers as I have discussed. So with this we put an end to this particular example.